Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Kevin King of the Texas Halo Fund. Kevin, thank you for joining us.
Absolutely. Happy to be here, Hall.
So what was your background before investing in early stage companies? What did you do before this?
Well, I guess it depends on how far back you want to go. I've run 10 early stage businesses. So I've been in the early stage industry for most of my career, but prior to that, I actually practiced law. But my background is in all kinds of early stage businesses. I've never limited myself to a particular field. I just go where I see opportunity. And it's been a lot of fun.
So what excites you right now? What really gets you jazzed these days?
What's exciting to me is how many people are deciding to be entrepreneurs. When I got out of college, I didn't even know what entrepreneurship meant. And then after I became one, and then there was always somewhat of a disparaging opinion of people who ran small businesses, and particularly people who moved around from business to business and opportunity to opportunity. And that's definitely changed. It's an exciting time for the whole early stage sector.
Well, you deal a lot with investors in the early stage. What's your advice for investors who want to invest in startups? What do you tell them to do before they write that first check?
Before they write the first check, they need some sort of approach. And I can speak from experience because I didn't have one. I would just see things that I thought were interesting, often with a minimal amount of due diligence, write a check that was somewhat small, but I might as well have gone to Vegas. It really is not the way to approach the market. What we do is we're trying to build a diversified portfolio of 20 to 30 businesses. If someone is going to pursue it outside of the fund approach, then they need to be prepared to build themselves a portfolio of 10 to 12 companies. And that's challenging. It's challenging from a seeing sufficient deal flow perspective. It's challenging from the capital requirements perspective. It's tough to be an individual and to build yourself an appropriate early stage portfolio.
Great. Well, you see a lot of startups coming through your deal flow pipeline there. What's your advice for people that are running a startup?
Persistence. One of the things that I think is exciting about running startups is that you do a little bit of everything, or maybe I should rephrase and say you do a lot of everything. And that appeals to me, and I think it appeals to a lot of people. But I think if you go into it with the approach that I have a skill set in a certain sector, and that's what I'm going to do, you're going to be awfully surprised at what's required when you're running an early stage business.
So you've seen the industry for some time. How do you see the startup industry evolving today?
Oh, volume. The thing that has changed so much. I mean, it's changed over the years, but continues to change so rapidly. And that is how many people are interested in early stage businesses, how many people want to start an early stage businesses, the awareness of the potential and opportunity there, both from an investor's perspective and from someone who's interested in starting a business's perspective. So it's an exciting time in the sector.
Well, great. So aside from volume, what do you think is the biggest change you see going on today? Any other shifts in the market from what you've seen before?
I think yes, but a lot of it revolves around funding. So much of the early stage business sector has relied on basically angel funding historically. And now there are funds like ours and others who are trying to take advantage of the potential returns in the sector. So that's kind of new, and it's still evolving quickly because there aren't really a lot of institutional players.
Great. And so for your fund, what's your investment thesis for it?
What we are looking for is, well, first of all, we're building a diversified portfolio, so there's no target sector that makes the most sense for us. But we're looking for good management teams with good ideas that we believe are defensible and that are capable of growing it into something, scaling it into something that will be attractive for someone else at a certain time. So we do tremendous amount of background research on the entrepreneur themselves, a lot of due diligence into the field that they are pursuing. We really try to get to understand the concept that they're pursuing, the product that they're producing, et cetera. And that's difficult when you're talking about a fund that has opportunities in lots of different sectors. It's a lot of work for us to get up to speed on what a particular investment potential might be.
So can you call out a couple of portfolio examples that fit that thesis that you think are good examples, maybe one or two?
Sure. Well, I can use our most recent investment, which is in a company called, our two most recent investments are actually somewhat similar. One of them is a company called Galen Data. Galen Data is a Houston-based company that provides a HIPAA and FDA compliant platform to allow medical devices to access the internet. 90-something% of all medical devices do not connect to the internet. So there's huge potential there. And the state of the market prior to Galen was that individual companies would have to go out and build their own cloud platform, build their own apps, and basically do everything from scratch. And that's a cost that could run $500,000 to $1 million. It's basically a whole raise for an early stage business. Galen is a SaaS model that it comes in with, can do a minimum amount of customization and get a medical device company up to speed quickly and present on the internet. They provide a portal for both the device manufacturer, for the patient or customer, and for the physician. So it's a very interesting deal. And it kind of crosses over various different sectors. So our fund is about a third, 35-40% maybe in life science, 35 or 40% in technology, and the rest in consumer facing or something else that's difficult to classify. So Galen is a company that really kind of bridges that because it's clearly a technology company, but their customers are life science companies. So it kind of appeals to us on multiple platforms. Another one that we did a little back in June is a company called Mach Fu. And what Mach Fu does, Mach Fu is a Baltimore-based company, and they have an approach that allows legacy products to communicate with cloud-based platforms in a manner that the cloud-based platform can understand. So most of these legacy products basically send signals consistently updating as to their status. Mach Fu is able to take that in the legacy language, translate it, and build custom screens on top of it. So if a device is sending a message that says there are no errors or it's functioning appropriately or whatever the message is, you don't really need that every 30 seconds or 5 seconds or a minute or however often it's sending it. So Mach Fu can build screens to say, only tell me when something changes or only tell me at whatever period, all custom to the customer. And the other thing that they're able to do is they are an Internet of Things at the edge company. So they take their product out. One of their target sectors is the energy business. So they can take their product out to a well site. They install on the well site. They gather data from all of the legacy devices on the well site and transmit it back straight to a cloud platform. The current technology for that is a guy in a pickup truck walking around, plugging a little handheld device into each piece of equipment and downloading the data, which I think it's pretty easy to recognize the potential savings and the value proposition there. So that's just a couple of the ones we've done in the last few months.
Those sound like good companies. So for startups in general that are launching today or in this time frame, what are the challenges those startups normally face? What do you see them struggling with the most?
Money. The challenge is always money. We have some of our portfolio companies are raising money a couple of times a year. If they're growing as rapidly, the ones that are really growing rapidly are raising a couple of times a year. And so it's a huge problem for them time-wise to be out on the road. One of the things that we consistently counsel our companies on is to be realistic with their valuation. So I understand the temptation for entrepreneurs to want to value their companies as fully as possible, but there's pretty much an inverse relationship between the valuation that you place on the company and the time that it takes to raise the money. So we counsel most of our portfolio companies to be conservative in their approach to increasing valuations so that they don't spend all their time out raising money and can focus on the operations and growing the business, which is truly what's going to make them money and us money at the end of the game.
Very good. So what sectors and applications out there you see as good immediate opportunities for investors to pursue? Are any of them heating up more than others?
Well, because we're headquartered in Houston, we see a phenomenal amount of early stage life science businesses. Those are always exciting. Sometimes they have a little bit longer time frame, but we see a ton of technology opportunities. We have technology investments, several in Austin. We also have the one that I mentioned, Machfusa Technology play out of Baltimore. So those are exciting. I personally like CPG, consumer packaged goods, because they can often be a little easier to understand and a little faster to market. But we actually don't see a lot of CPG. So I don't know if that's just from the types of things that we've invested in the past, but it's just something that's interesting in the market.
That's great. So in the last few minutes that we have here, what else should we cover that we haven't?
I think I would go back to the comments that I was making about investors who are interested in early stage businesses. And that is to go into it with the concept that they're going to build a portfolio, because the ability to be successful on investing in a single early stage business is very, very difficult and very challenging for investors. So I think they need some sort of systematic approach or select a fund like ours in order to access the market appropriately.
I see. Very good. And so how best for listeners to get back in touch with you?
Well, they can always visit our website, which is texashalofund.com. They can check us out on LinkedIn, or everybody is welcome to email me directly. It's kevin.king, KEVIN.KING @texashalofund.com.
Great. We'll put those in the show notes. Thank you for joining us today and hope to have you back for a follow-up soon.
Appreciate it, Hall. It was great. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.